record on this one. All right. Welcome in, everyone. How's everyone's Sunday going? Hello. Can you guys hear me?
Going great.
Awesome. Yeah. I don't think David's gonna be. David has some things to do today. I think he has some plays he wants to share as well, but he didn't send them to me, so I'm gonna go over the ones I have already. And I won't spend too much time on this. Like I said, I really want it to be 15-20 minutes recorded so you can go back and listen to it. But one of the key things I want to start with, though, is what happened on Friday. Wednesday, Thursday, chart formation going on. So a couple of things I want to bring up is you gotta, if you look at the chart, SPY chart right here. Let me switch these candles. Give me 1 second. Not this one. So I use a Weibo desktop. If you look at SPY, obviously the start of the year was around here. It was about 478. We dropped all the way down to 380. The 380 is actually significant because it was a nice support at somewhere around here, which was March last year. One of the things coming up for Feds is this balance sheet where they will start selling off. The last reaction where they actually had a balance sheet sell-off was in 2008. And 2008 was somewhere around 2008 or 2018. I think it was 2008, where Feds had to do something like that. You could see, even though this wasn't that high, it came from 125 all the way to 53. I'm not saying SPY is going to go all the way down, but I think they did some balance sheet sell-off around there as well, and it came all the way down. Probably around there was when they started. You can see the massive drop around here. They haven't started that yet, and we've had 4 months right now. Actually, we had from the start of the year, we've had 4 or 5 months have been red. This is the monthly chart for SPY, and it bounced the right nice support here. What I'm looking at, and I'll go into some of these plays I'm looking at, is 367 area is actually very interesting for a couple of reasons. One of them is I'll show you in a minute here. If I put my line around there, there's some double bottom around there, right? And I can change it to, so you can see, zoom in well here. You can see there are a couple of bonds here. February and March 2021, we had double bottom. January last year was around 380. Oh, sorry, it was last year, and we bounced around there. This 367 is a nice area where I think if we keep the downtrend, we might get there very soon. And when I look at things like the monthly chart, one of the things I like to back up is I like to use the options. What are people playing to know what's going to happen next? So first thing first, right? When it comes to options play, you have to always look at which, like I said last time, the volume and the open interest they tell a different story. Open interest is saying how many people actually hold or are holding the option play. The volume is telling you how many people are buying or selling. Every time you see the volume more than the open interest, that tells you that they're buying more than they're selling. So more buyers came in. Look at this play here, 370, May 23rd of May, which is tomorrow. 370 has 85,000 volume. Well, obviously because it's cheap, right? But this one, I'm not really worried about this one. I have to go all the way to June to show you something here. So when I look at the options for June for SPY, remember the line I drew on the screen, 367? Look at the 368. He had about 66,000 volume coming in on Friday. So that right there is telling me somebody's expecting this thing to drop that much. When I was talking about, and I think Lou was talking about this as well, so I think David mentioned this a few times as well. When I kept referring to the 380 level for SPY on, I think it was last week you mentioned this. He had about 90,000 or something like that. I think they've sold off a little bit. It's now at 75,000. SPY actually came down to 380. Whenever you see millions of dollars going into an option play, which is about a month out and is really out of the money, especially on SPY. These players are not, these traders are not your regular traders. They're not going in hoping the SPY is going to get to 368. They're going in because they believe SPY is going to be at 368 at some point. So that's what you have to always keep in mind. I'm not saying SPY is going to drop that much. You never know what will happen. But 67,000 in SPY 368 is telling me something. Number one, it's too far out of the money. Nobody's going to spend that much money here. And it's about a month out. The 1st of June is when the balance sheet will start to sell. What they would do is, and this is the trick they've been doing since, and I'll show you real quick here, and I'll go back to some of the plays I've got in mind. They would, if you look at the hourly chart, for SPY, see what's been going on since. They will spike you up, give you like a double top, then they will bring it down. Give you a good spike, bring it down. Then spike you up again, give you double top, bring you all the way down. Then they will spike you up again, you get like triple top. Triple top, right? This one, and they'll bring you all the way down. They will bring you up again. So they brought you up here to 410, which is roughly around there to fill the gap. Then they brought it down to give a double bottom. Then they brought it up to 395 around here. And this is why I was saying we might be seeing 395 on Monday. They brought it up to 395. They brought it all the way down past the 385 to 380. They might bring you up there again to 395 tomorrow, somewhere around here. And, or maybe, I don't know, maybe next tomorrow. It could be Monday or Tuesday. They'll bring you up to 395 again, in my opinion. And I could be wrong here. And they will bring you all the way down again, past 380. That's what they've been doing for the past 4 months. And if you see, every time what's it called again? Powell comes online, he's always saying soft landing. They're not dropping it all the way down. They're pushing it up, bringing it down. The point I'm trying to raise is every time they push you up, and I think I mentioned this free, or I don't know how many times on the floor now. Every time you see SPY just spiking for no reason, yes, they're gonna dump it the next day. So everybody buying calls, you better be selling and changing once you see SPY get into double tops. And here's a good example. It's at 395 here. They brought it there for a reason. It's not because they want to. They brought it to 395 and they stopped, or 394.19, and they stopped. And they had a little bit gap here. They filled the gap. But they might be sending this guy back to 395 and retesting the 380. They will pretend it's gonna be a double bottom, just like here. Look at this bottom here, 385. They send it all the way up to 409. Brought it back to 385. Give us a little bit of shimmy here, then boom, dropped it to 380. They'll do the same thing again, 395, make another double bottom, maybe bring it back to 385 and drop it to like 370. So be very cautious if you're looking at SPY. Hey, Pete, you got something to say?
Yeah, I don't have the ability to zoom in right now. Is that the hourly time frame?
Yes, this is the hourly, sorry. Yeah.
Thank you.
Yeah. So yeah, that's the way they've been playing SPY since. So the reason I'm bringing this up is not to say, hey, sell, sell, sell. I just want us to be looking at the trend. They will change the trend. These guys are smart. For every money you make in the stock market, someone is paying. And the stock market is a very clean market where people go in. If I put $100 on a contract and I lose $100 on a contract, someone else is making $100. That's the way it works. So for every money you make, someone is losing that money. And then most of the time the house is losing the money. So on Thursday, this is Friday PM, Thursday, on Wednesday, when I saw this came down to 385, okay, I was like, oh, this is double bottom, because I mentioned this on the floor so many times, right? We're gonna see 385 double bottom here. We saw that double bottom. On Thursday, SPY did not move at all. I was like, what's going on? Then I started to look at the chart, because you can't see a lot of these bars unless you wait for the play to develop, right? This is where you have to be patient when you're reading your charts. When it touched 385 in pre-market, I knew they would do that because they won't let us get this 385 to 395 during the day. See what they did? They moved it to 390 and made it flat, up and down, choppy all day, right? Then a big green bar to 390. But see what happened? It actually formed a bearish flag here, like a bear flag, right? I don't know if a lot of us know about the bear flag, but Essentially, a bear flag is the almost reverse of a bullish flag, right? This is a bearish flag right there. And every time you see a bearish flag, almost about 75% of the time, it goes down. When I saw this, I was shouting UVXY 18C. It was only about $2, and I think when he touched down here, it went up to like $30 or so. So from $2 to $30, that's not bad. I think some of the other players as well did the same thing. This is a bearish flag. Now, what they're doing here, they will do almost exactly the same thing that happened at 3 to 5 years. See what they do? They'll push you up here. And I think they'll probably do the same thing for us here, push it to 395. Then we'll see the reaction here. If you get more volume, they might touch 400. But, 395 is where I'm watching anyway. So, yeah, be very careful when you play SPY. I think June is going to be, they'll pump it up in June to give us a false impression that we're bullish again. And they'll bring it back down because of the volume I'm looking at here. The 368 volume is telling me something really, really scary. But yeah, that's the message I have on SPY. Let me jump on some of the plays I'm looking at. This week has got some powerful companies reporting. NVDA is one of them. I'm not a big NVDA person, but when I looked at the chart, and I'll share this screen, this slide. Again, some of these levels, I've been doing a lot of levels. Some of these levels are just my opinion of where the play will go. It may or may not. That's why sometimes, if you notice the past few weeks, I've been putting more levels than plays out there, so that you just have to know how to play this. A lot of this is going to be really volatile. Like in a day, you could get SPY going to 394, then back to 380. So it's difficult to swing anything right now. The best thing I could do is put the levels out there so you know how to play the support and the resistance, like a straddle, sort of play. But looking at this, NVDA reports on May 25. When I looked at the chart, and I'll show you up real quick here. Sorry, I had to rush really fast. Like I said, today is a bit of a tight one. But when I looked at the chart on NVDA, my first reaction is NVDA 175 is where the resistance is, right? And if you look at this, you could see, we could go up here, but let me just put here just to be safe, right? You don't want to, again, some of these values, you don't have to be accurate. You just have to have an idea of where you need to be. I'm not saying don't make sure I could move you all the way up here, but what if it doesn't get there? That means if you're playing 176 rather than 175, that $1 difference can make you be out of the money. So those are the things where I like to put it right here, like somewhere average between 175 seems like a good point here. I don't want to chase the 176, but NVDA is not cheap. So if you look at NVDA, if it goes past 175, then the next level up obviously is this one here, actually this one here, which is 180, and there's a gap fill. So there are a couple of things, like I said, I'm looking at the 175 and the 180. If the earnings report comes in nice, then if you get a bullish day on SPY, we might go up. And give me 1 second, sorry.
That chart looked like a SPY chart.
Yeah, for sure. I mean, it runs very similar to SPY.
So sorry, man. Yeah, the little one's not feeling well. Mrs. is out of town, so it's just me. Yeah. So 175, and I think I heard someone say it looks like SPY, and that's been the case for some of these stocks, especially the ones in S&P. Remember what I told you about? I don't know if anyone remembers. I mentioned S&P. So future determines the index or ETFs. The ETFs determine the stock they track. So if you look at SPY, let me just go real quick and pull this up. So if you look at S&P in general, S&P tracks, let's look at the top 10. top 10 oldest in S&P. You have Apple, Microsoft, Amazon, Tesla, NVDA. If you look at the chart for all these stocks in here, maybe apart from a couple of them, obviously Berkshire, other ways a different one. But if you look at some of these ones in here, you will see that they look like SPY. And that's because when SPY goes down, it sells off all these stocks he's holding based on the percentages. If it goes up, a lot of them go up with it as well. So if you look at this and you look at NVDA, they're almost the same. If you look at Apple as well, Apple will have almost the same structure as well. So they always tend to follow like that, like, double bottom here, then down and up. This is how you determine whether, they basically the ETF just drives the way, all the stocks it tracks, especially the ones in the top 10. But anyway, let's get back to NVDA. So I'm looking at 175 here, I'm looking at 181. Now, how do we play this? It did a nice double bottom here. Remember what I told you about the double bottom on SPY the other time? We had something similar here as well. It filled the gap, went up like a bear flag in here, and it played out the next day. And here, I think they've been doing since in every single, if you look at the hourly chart, you will see double top. If you scroll to another place, you will see triple top here. And if you scroll up again, you will see another double top here. So that's the play they've been using on us all this while. So here now we have double bottom on NVDA. That will be where I would set my put level to if you want to buy put on NVDA. NVDA is not cheap, obviously. So an IVs are going really high on this one. You remember I was telling you about SPY contracts in general. Implied volatility is very key. If you're buying anything 100%, you're more like, obviously definitely paying twice as much as you should be paying normally on a contract when your IV is up to 100%. But again, another interesting thing I was talking about last week, right? The volume and the open interest. Look at the volume here on 150 puts for NVDA. It's not cheap, but you can see the 6,000 compared to the open interest 4,000. That means, almost about 2,000 but more, or, this is probably going to be around 5,000 by Monday. And you can see the calls, the volume on the call was it was crazy. I don't know if they sold already, but 10,000 compared to 2,000 here. So I think a lot of these folks are thinking, I'm going to get my 170 and get out. I don't think they're going to wait, but obviously they're not cheap. So they're probably trying to get out quick before then. But some interesting volume here though on NVDA, even on the OD, out the money, verified contracts, and the Greeks are not great, but you still have 27,000. They probably bought when NVDA touched 157. So you never know. I'll keep my eye on this one. Semis have not been doing bad, right? Because AMD had a nice earnings report. So I think this is going to really push. Once it gets above 175 or 180, I think this double bottom here will really play out. Again, watch out for, I think JFan does a lot of NVDA. David has a lot of NVDA moves as well. So watch out for those on the floor. I'm not a big NVDA person, but from the chart, I see possibility of a double top here, which would be around, if you want to go with the chart, it will be around 176. And this, and another potential double top here could be around here, or maybe even 180. So 176 to like 175 area, I think. If they push it up, they might give us that. And it might come down again, who knows? They might, because there's so many things can happen. Yeah, this could form an inverse head and shoulder, or you could just straight rip on Monday, who knows? The next one I was looking at was Costco. Costco reports on Tuesday. No, not Tuesday. I think on Thursday evening, right? Costco, same as the Target. Same as Target and Walmart. Costco had a massive, if you look at the weekly chart of Costco, is extremely ugly. They had an interesting thing I want to show you guys here, actually. It's something Lou got me started looking at. I mean, I knew about this. I knew about this before, but I've never really used it a lot. There's something they call RSI Divergence, which is when the price is going up like this and the RSI is coming down, right? You see, I don't think I could draw lines here. Let me see. Yeah, I can't draw lines here. But in a scenario where the RSI, you can see the top of the RSI is coming down and the top of the price is going up, that tells you it's a bearish divergence. And you can see this one is clearly telling us why it dipped. The price here and the price here, this was going up, RSI is going down in terms of the peak of the RSI. This is a bearish divergence, and you can see why it came all the way down. Interestingly, though, it bounced on 406, which is about.
I forgot I got my AirPods on.
It bounced on 406, which is around here. Not too bad support around here, but this is not great. I'll be looking at, if you had bounced around here, let's put this down to somewhere around there. If you had bounced around here, then I'll be like, yes, we're definitely going up. So I don't know much about this Costco play right here. It's a bit tricky.
Oh, I'm so glad you said it. I gotta get crispy.
Hang on a minute. I think we got someone on mute.
One of my students.
All right. So yeah, I think if we bounce around here, I'm looking at the weekly. The RSI is almost at 30, and it's sold a lot. I don't know if the earnings, if this is gonna sell more. I mean, it's been dropping. It dropped about 60. As a matter of fact, it dropped from 500 to 407 in like I think about 2-3 days or so. Yeah, in like 3 days. So that's a lot of selling. I don't know if it keeps going down. I think this might even turn up. Probably retest. I have 435 on the cards on this one. This one is not a cheap play. So if you want to play this, we should have been in, but it's not cheap. Some of these things we can't really announce it. This is a very tough market right now. But 435 is where I'm thinking. The last earnings report was 51 billion. They beat the previous one, obviously. This one, the forecast is about 3.25 for the EPS, earnings per share, which I think is going to put them right at 435-ish, and it's got a gap to fill here. But I really think Costco is a really good company if you want to go long on it. Not now, maybe after June or even in October. This is a massive discount of 200 right here. If worst case scenario, if it comes down to 374, I think a lot of people are going to buy, because you can see, actually, let's use the top here. So this is around 386. I think this level is a super zone, and you can see it took it about from May 2021 all the way to June 2021 in this area. It's a massive consolidation. I think this level 386 on Costco, if you're buying, I know it might be expensive, but if you're keeping this for long term, this is a good area to even go on the option. If he breaks this level, I'll be surprised if he breaks this level. This is 3 months, up to actually even starting from here. It's a massive consolidation between 362 and 380. So yeah, I'll be shocked if it goes below 380. This might, if it comes to 380, this might be a great area to load and go extra long on Costco if you have those patience and you want to buy a contract and just wait for it to go up. For this one is extremely expensive. I can't really say which one to buy here because of the prices. I was looking at the price, I was like, yeah, this is too much. So if you want to play this, I'll probably suggest you go with spreads and be really careful here. The other ones I've got on the deck, Best Buy. Best Buy is one I'm looking at like, yeah, I think this guy is gonna go down. The reason is inflation and everything going on. I don't think anybody's buying electronics. I just can't see it happening. Everybody putting big money on electronics. I'm not saying people cannot afford it, but it will be weird to see electronics store making more money than if Target and Walmart could be losing money. Yeah, I'm pretty sure people are not substituting bread for an iPad. So I really don't think this guy. I mean, he's at a very good level here. But the interesting thing is because of the chart I'm looking at here. So I'm trying to zoom in here. There's a lot of gaps here actually. Look at the gap here, for instance. Gap between 65 and 66. There's another gap there around 60.7 to 61. There's another gap here between 54 to 55. I will be surprised if this, unless the market is all of a sudden bullish, which I really doubt, because if the market is bullish, nobody's going to come to Best Buy and be loading up. I think they'll be buying the most cheap, the most highly profitable companies like Tesla, Apple, and the rest, right? I don't think Best Buy will be the one that will be jumping on. In my opinion, I think this guy comes down to 60. Worst case scenario, grand slam of 55 because of this. There are 3 gaps down here, I know there's a gap up here as well, but there are 3 gaps here that you never filled since 2020. I think this is a good opportunity for it to fill. I don't know if it's going to go all the way down to 48, but I think 55, even 60. I think this might touch 60, depending on how the market opens. So this is at 72 right now. It bounced on 69. 69 is not a bad area. You can see there's a lot of support around here, around this area for 69. But if it loses that, my money is on 60 on this one. I think 60, which is about 1.5. There's a lot of volume as well, confirming my my theory. The IV is not great. The Greeks are not great. So this one is one of those ones where you have to go in and get out. I think they report early in the morning. So hopefully you have to buy early in the morning tomorrow. If you want to buy, then maybe buy. I don't know if you, the price is not too great, but if you can afford 2 of these one and sell one in case it keeps dropping, or straddle with a call. I think the calls are reasonable, but if you want to buy a call to straddle a put, you want to go long on the call, longest expiration. That gives you much more. As you can see, I don't know why people are buying the 92 on Friday. There's about 4. I don't know if they sold or bought, but I think if you want to straddle, try to go long. So you go short on your buyers and you go long on something to protect yourself. So you go short on the put if you think it's going to go down, and you can go long on the call if you think it's going to go up. That's the way you normally want to straddle, so that you don't fall the trap of implied volatility. Because a lot of these, if you buy an option with IV up to 170, and it doesn't go your way, the contract will go to 0 immediately by 9:30. It will be $0. So you gotta be really careful when you're buying anything when the implied volatility is 170. But I think Best Buy is gonna go down, in my opinion, because like I said, if Target that sells food and Walmart that sells food in this climate is going down, I don't think that an electronic store is going to be going up. But what do I know? I mean, everybody's going by. I mean, we've seen earnings report really bad and the stock goes up. So you never know. But my money's on 60p on this one. Even Grand Slam of 55p, it could happen, but let's see. The other one I've got as well is my favorite one. I talk about this guy a lot, Macy's. Macy's is a very interesting area. Yeah, when you look at Macy's, Macy's has is at $18 right now. There's huge support around this 15.8 area. This is where I think this is a massive support if you want to go long for Macy's. If it doesn't drop, if it bounces on this layer, that's a massive support. When I look at the weekly chart as well, I see that we have a nice support around this 15 area on Macy's. You can see how many times this area bounced. I think this is a great support if it comes down here. I think if Macy's come down to 15, there will be a lot of buyers buying in. So you could either play 15 puts on this one and or just wait for 15 and go long, or see what happens after the earnings report. The report, I think Thursday morning. I think this one is a very tricky one. This might come here and bounce here. If it doesn't bounce, if it doesn't rip in the earnings report, I think we might see 15 before the earnings report. Friday's Wednesday's FOMC meeting, and I think some of these, I don't know if he's, who knows, he might be bullish like last time, he might be bearish, but I have a feeling this might come down to the 15 area, then go back up. So just keep watch out for this one. You could play to play Macy's. Macy's is not too bad, but you look at the implied volatility on Macy's for this week, 260 for some of these ones. That's ridiculous. You don't want to be in. You don't want to be holding contracts here, and they're not, and the stock is not going in your direction. You lose a lot of money. So watch out for Macy's. But if you want to go Macy's, I like the monthly call on Macy's because implied volatility is terrible, but it's still not too bad. And Macy's is fairly affordable, obviously, better than the likes of Costco and the rest. And you can see here, Trent C has 11,000 volume that came in on Friday. So they must know something, right? So Trent C for June. That's interesting, actually. Yeah, 11,000 people bought Trent C on June for June expiration. So keep an eye. It's about $114. times 11,000. We're talking about, I think, 1 million right there or thereabout. So yeah, I think somebody knows something there. I don't know if it's one person that bought it, but you never know, right? So that's something you definitely have to keep in mind. There's a lot of volume on the call here, and I think they bought the put here to probably straddle. But the put volume on this month is next to nothing. I mean, we only got 4,000 here, so they're probably straddling with this one to save themselves, right? To save themselves, but 11,000 open interest. But yeah, some incredible volume on the call side for June. So maybe they think Macy's is gonna go up. Who knows? Because Macy's is a bit, Macy's is one of those weird ones, right? Everybody loves Macy's for some reason. So 11,000 on the 20C, 10,000 on the 26C, and they're decent price. I like to keep it close, but 26C, maybe not. You never know, right? But keep an eye on. Watch out for this guy, Macy's. There was something cooking up here. And the Greeks are awesome as well. The delta is way more than the theta, which is what you want. Like I was explaining last week, every time the Macy's go up by 1, they will add $39 to your contract. So if you start with like 114, if it goes up to 19, this will go up to your contract price will go up to 150 or thereabout. And keep in mind as well, when you're playing stocks that report later in the week, the implied volatility will start to go up again. Right now it's about 91%. I bet by Tuesday, this will probably be like, 120%. So keep an eye. I think this 20C on Macy's is a very good one. I don't know why, but it's not cheap. So you have to set a stop loss or maybe straddle with a put here. But you got time on the contract anyway, so that's a good thing. So the other one I was also looking at, it was MRVL. So I was talking about NVDA. One of the things about NVDA is when NVDA reports, there are about a few companies that follow NVDA. AMD is a good one that follows NVDA. If you don't want to play AMD, I don't like this chart. Yeah, let's see. Yeah, AMD looks bearish, but okay. But in any case, if you don't want to follow NVDA, or say if you don't want to play NVDA, AMD is a very good sympathy play for NVDA. And as you can see, it's not bad, yeah, but I just don't like this. It's been red for 3 days now. You never know. This is not it's not an armor. It's just one of those ones where, let's have a look at the 1 hour chart. It came up, so maybe, yeah, this one is a very tricky one. I would have loved to buy it from here, from the 88. You can see his bottom here, somewhat bounced around here as well. I'll probably wait for a retest of this level before I gain on AMD. If you want to play AMD instead of NVDA, wait for the retest of the 88. 88 level. That might be a very good opportunity right there for you to go on and go to 95C for the week. Or wait for it to go all the way up to 100C, but it stopped right here, right at the resistance. So this is tricky. Let me even look at NVDA. I didn't see that on NVDA. Yeah, and you see what I'm saying? So NVDA went above the resistance here, above the support. You see what I mean? And AMD stopped right there. So that's why when I saw that chart, I knew something was going on. It stopped right there. Let me put a line here so you see what I'm looking at. So it didn't go past it. So that's telling me, yeah, this guy doesn't have strong buyers. I think it just went up because NVDA went up. So I think this guy will come down to 88 before he goes up again. You never know. Maybe we open up now and everything start flying. It's just, we can't tell in this market, but not going above that support here is telling me, yeah, I don't think buyers are ready to come in. If you, again, like I said, compared to NVDA, if you look at this level, it's the same one we're looking at on AMD. NVDA blew past that resistance, and I think it probably tested around there, but it blew past this level here. Let me see if I could do the 2 charts together. So AMD looked like this. Let me put a line there. I don't know if you guys are following, but I'll put a line there. So the AMD is the one on top, and NVDA is the one above. You can see NVDA blew past it. This one stopped right there. So I think this guy might come down. It all depends on if NVDA keeps going up. But AMD is a very good sympathy for for NVDA in case you don't want to play NVDA. Then MRVL reports. We used to play MRVL in this group. I think they had some bad news or something like that. And MRVL has got the same thing as AMD. You can see, I'm looking at where the last place he bounced. I guess we could use this one. MRVL is not bad as well. I'll be looking at the 56C for MRVL. That will determine whether we're going or not. You know, if it goes, to me, if you want to play this, you got two options right here. It's as simple as this. Where did he drop from and where did he bounce? That's what you got to do. Oh, yeah, I'm done. So it's really simple. You either play 56C or you play 51 put. That's how easy this one is. Because I looked at that 56, you can see that line. You know, you got something around there, especially around there was resistance, broke out, and it's, you know, undecided yet. Failed the retest, rejected, came down, but it bounced, double bottom here. So 56C might not be cheap. Let's have a look at the cost for this one. The call, yeah, it's not cheap, but you see what I'm saying? Every time you, this is a very good example. Every time you look at a resistance and you see that you've seen it like 3 or 4 times, if you're not sure, go look at the contract. The contract will tell you something like, yeah, there's a definite reason why everybody's buying 56C. Look at this 2,000 on this. Let's have a look at the remaining options. 2,000 a year to 62. I mean, these ones are extremely bullish, but I look at the next close to the at the money calls. 2,000 on this 56 level. There's a reason why they put it there. And I bet if you look at the 51 is not too bad, but 52. These actually, there's a lot of calls, more calls than puts. Interesting. But yeah, MRVL is reporting this, I think Thursday. I don't see a lot of puts here, but if you want to protect yourself, like I said, if you're feeling bullish, buy the near-term call. If you're feeling bearish, you buy the near-term pull and straddle with it further down the road, call or put. So like in this scenario here, there's no 56C here, but 15,000 open interest on the 60C. Maybe they're expecting something, and it's not bad. It's, you know, I mean, this is expensive. You might want to go up, but the further you go, obviously, in this market, it's a bit tricky. You might as well not play or play spread or something like that. But yeah, I'll be looking at 56C and 51 put on MRVL, just because on the hourly chart, 56 level is a very tricky one. 51 has been is bounced a couple of times here. On the 51, I think if it blows past 56, it's going to get to 58 level around this area, 58 level, which will give you a good chance as well. You know, I'm not a big fan of MRVL, to be honest, but I'm just looking at this chart now. This is what I see, and you can see 58 level will be another resistance. It'll be a really tough one. So I think this one is going to struggle to go out. You might want to play this one close, even if you want to play. The next one I'm looking at is, sorry, I'm running through a lot of this real quick. You know, we ain't got too much time. Ralph Lauren reports, I think on a Tuesday, this one, May 24, I think, yeah. On Tuesday, Ralph Lauren, for some reason, I looked at Ralph Lauren. I mean, I like Ralph Lauren shirts and everything else. Everybody likes, well, not everybody, but a lot of people wear the, because of the horse on it, and the logo is really awesome, right? It bounced at a very interesting level here. Look at this. This was June 2020, about 2 years ago. It failed that resistance and it broke out. Ever since then, it never retested that breakout. It just retested it now. So you never know. This might be heading up, but I don't know a lot. Like some of these stocks reporting, I like to study them well before I even do anything with it, but I don't have time to do that nowadays, some of these ones. But it bounced at 90.7, and one of the things I do when I'm looking at a chart is I always ask myself, what's important in the 90.17? And I found my answer here in June, the 5th of June 2020 and the 8th of June 2020, there was a double top and it came down and it broke out in December, and now we're back there again. So this might be a good level to bounce on Ralph Lauren. But again, the consumer sector has been it's been getting massive, sellers. Like it bounced out around here. I don't know if it's gonna bounce out around here, but if you want to play this 100C, you could see here. Let me put a line here for you. 100C is a very good level. 9900-ish. Again, like I said, it doesn't have to be accurate. Another one is let's look at this. There's some line here, but I like this one here. There's 84, and there is also right here is a really good support. Somewhere around here, 78. So if you want to play this going up, you want to play the 100C. If you want to play it going down, you want to play the 84 and 78. The good thing about Ralph Lauren, which is one of the reasons I actually looked at, is keep this number 100, 84, 78. The good thing about this when I was looking at it was a couple of things. They have monthlies. Monthlies expirations are great. The implied volatility are not bad, apart from this one. These two are about above 100. The other ones are less than 75, which is not too bad considering they have earnings report this week. I talked about the 100C, not bad, but the open interest is great. Volume, not too bad as well. The price is not great and the spread is not great too. So you have to keep in mind, if you really want to play a Ralph Lauren, I think this one might be a spread candidate because the variation in buy and the bid and the ask is not too great. And if you look at the 80, I think we talked about 80 put, there's a lot of volume coming in on these puts for on Friday. So that's telling me they're probably thinking this is going to go down. But you can see they're playing it really close. The bigger volumes are on the ones that are really close. Obviously, this one's, 350. I think whoever loaded this 350 is probably thinking it's going to slide all the way down to 65, which is not impossible because if you look at the chart, 65 basically, that'll be rough. 65 will fill the gap here on the weekly, and it will come all the way down somewhere around there, which is really, you never know. Like, I mean, nobody thought Target is gonna drop that much, but on Ralph Lauren, they did have a massive drop here though. Look at the massive drop. So maybe maybe they might be right. Maybe this is something. Maybe this is the next big drop. 65 put, but again, the spreads are a bit ugly. So you have to keep in mind if you're playing this one. This might be a super lotto. What else? I got Alibaba reports on the 26th. Chinese stocks. I was just looking at this one, thinking, "Oh, what's going on with Alibaba?" Then I saw this level. It bounced right. It never did a double bottom. I like double bottoms because that's a confirmation you're actually going to go anywhere. Because that will tell you whether people are buying it or people are selling. So when I see double bottom like this and it never retested, I always have that feeling it's going to come back and test it. So this is a very good candidate. Maybe he's already done it, but it's not going anywhere. It doesn't look like it's going anywhere. I think 80 put on Alibaba could be interesting here. Again, in this climate, you want to be playing the call and the put at the same time, but you want to mix the dates. If you're feeling bearish, you want to buy the short-term put, the long-term call. If you're feeling bullish, you want to buy the short-term call, the long-term put, so that, even if your direction doesn't go your way, you have more potential to make money or to make the money of the short-term call from the long-term position you're in. So what I'm saying basically is if I'm feeling bearish here, 80 put on Alibaba is about 155, and you can see this is another good example. There are more volume than the open interest, so they're probably looking at the same thing I'm looking at here. You never know. 2,000 volume more than the open interest tells me that more people are buying, because think about it, if everybody that held is sold, that means extra 200 must have bought more, right? So 2,000, I think this is about 155, 164. It's not the best for earnings, but this is reporting on Thursday morning, I think. So you got time to get out in case it goes down, and you want to protect yourself. Like we're looking at, I think the 94 might be too close. Maybe you're looking at this gap fill right here. There's a gap fill here from 99 to 100. Let's just say 99. And this one you probably want to play. Let's look at next week for 100C on Alibaba. Again, 330 people bought in, so maybe those people are struggling as well. The price is not great, but it's not too bad. You know, they played 100C here, 330 people bought on Friday, or maybe sold, who knows, but we'll find out tomorrow. But the price is not too bad if you're struggling. Again, remember, you don't have to play everything. You just need one. You need one strategy. You need one stock, and you could actually maximize your profit. As you can see here, the 100C is not bad. It's not the cheapest, but it's right there. And Alibaba reports Thursday morning, 100. Actually, if you really want to do it, if you want to buy the call, you want to protect yourself, you want to go out, and you can see the monthlies. Look at the volume on the monthlies and the open interest. They're incredible, but the price obviously goes up because you're buying more time, right? You never know. China might be booming or might boom. I know they're trying to clean up some COVID starting from today, actually, in China. They're Monday right now. So I think they're starting to do some mass testing to figure out whether they need to open up or not. So who knows? They might release some bullish news during the week. But if you want to go far, 100, it's a bit expensive one, like I said. So play safe. But if you want to edge your put, buy a call just to be safe and buy yourself more time. All right. I'm almost there. Maybe we could run through a couple of items. You guys might have Walmart. So one thing about Walmart, I was looking at Walmart and I was like, oh, is this guy done? And I was looking at the weekly. I did this. I went to one of my indicators in here and I pulled up the EMAs. And I looked at this. I started to figure out, what is this line here? The green one is the EMA 100. The blue one is the EMA 200. This one, I was looking for where it bounced around here. It's an EMA 265, which is kind of odd, but I just wanted to see how many times it's bounced. It's bounced a couple of times on the EMA, more than once on the EMA 100. It completely failed that 100. It failed the 200 on the weekly chart. So I'm looking at, maybe it's going to bounce on this orange one, and that orange one puts me at 115. So that's another thing as well. I don't know if he's going to get there, but that's something to keep in mind. If Costco doesn't do well, Walmart is going to go down again. Like, that's what you got to understand. But like I said, they've sold so much. Like, it's gone down so much. Like, it's unreal. Like, I don't think Walmart is going to be below 100 that long. I think they're going to buy up. But on the monthly chart, though, it's telling me something here. When I put the, let me do this. I don't need this guy. When I put the line right here on the monthly chart, on this, let's just say here, again, like I said, it doesn't have to be accurate. You can see the EMA 100 on the monthly is 100. Now, this would be a good bounce. Remember what I told you about when you break out the level? You could see you broke out this 100, retested, and it went up and never came back. I don't think this level here is a good support. Maybe it will come down to 113 right here. Maybe we'll get a quick bounce here first before it comes all the way down to 100. But if Walmart falls to 100, I think a lot of people are going to buy up big time. So, set your alert for 113 and 100 on Walmart. I really doubt if he ever gets there. I think we bounce on this 113, depending on the market. But if you keep selling off, if Costco reports a really terrible news, I think Walmart's going to come sliding down as well. 100 put on Walmart is on about $4. So, this is one of those ones you could buy and just like, I don't care what happens. $4 is a good lotto right there. Even the 113 is about, a 115 is about, this one's a bit much, but it's about $75 to $80. The 110 is about $20, but the 100, even for next week, the 100 is $15. So this is something that's interesting. 110 has got a lot of volume as well. So if Costco goes down big time to like 380 that I was telling you about, or 386, I think Walmart's going to be around 115, maybe between 115 and 100. So keep that in the back of your mind. I think it's bounced a couple of times on the monthly or even less than the EMA 100. It would be nice if he touches this level. I think a lot of buyers will come in. I don't know when. Maybe the EMA 100 will go up a little bit around here and it will bounce. You never know, but keep that in the back of your mind. What else have I got? Zoom is the one. David, I know David put out 40 put for Zoom. which I think is really good because if you really think about Zoom, this is the monthly chart for Zoom. The only thing I've got is Zoom has never been less than 50. Zoom is probably one of the ones that are still remaining. That hasn't actually, when was this? This is 2019. Yeah. Those stocks that were like IPO'd recently, Zoom is probably one of those ones where it hasn't really gone down past the IPO price. So this is started as 59-ish in 2019, ran up to like 1,000%, and obviously it's coming back down now. It's right 59. My line is not accurate, but on the monthly chart, you can see the RSI is almost there. The only thing about the put on Zoom right now, and I'll say this very carefully, is this monkey pox thing going on around town. I don't know if everybody's going to be looking at it like, ooh, is that another lockdown play? And this one reports tomorrow afternoon. So, but David put out the play here, and you can see the volume on that put is really massive. The open interest is more than the open interest, and like I said, that means more people are buying in. It doesn't mean it's going to get there, but obviously there's a lot of people looking at it as well. So it's not just us. It's a $17 play. Is it going to get to 40? We never know, right? That's what we said about Target. Target when I think David got a 170 put on Target. Nobody ever thought Target is going to come all the way down to 150, but they did. So this is a good play right there if you want to hold it. Again, it's a lotto, right? So energy report, you never know. You might come all the way down because it depends on how tomorrow goes. But Zoom, I don't know if Zoom is going to have a lot. I think everybody's going back to work. That's the thing. Everybody's going back to work now, you know. The only thing that might help is the monkeypox news going on. I don't think it's bad. I heard the report they already have a jab for it. So I think this one is a candidate for going down. Like, look at the volume on the put. They're not too bad, but I don't think anybody's buying on the calls. But even the calls are ridiculous. And Zoom implied volatility. Look at what I was saying. This is ridiculous. If this doesn't go your way, just forget about your. But this is low to end. 40 put is about $17, $18. So hey, the play's out there. If you want to jump on it, you don't have to if you're up and you want to sell, you can sell, but you never know. If it goes down $40, right? Like I was showing you in the chat, if it goes down $40, you're right there at the $40 mark, you know. And look at it, it's not far. If you really look at it like on the weekly chart, let's have a look at the weekly chart real quick. Yeah, it's not really far. There's nothing supporting this guy until he gets to so right now it's already broken what 78. There's nothing supporting it once it gets below 60. There's nothing holding on to Zoom right there. It's just going to be a straight slide down, people jumping ship. And that the other thing as well is I think Cathy Woods is holding this Zoom. Anything Cathy holds, everybody's been selling it intentionally just to ruin ACK, but that's just my opinion. But so yeah, keep that back of your mind. Zoom 40 puts already out there. If you don't think it's gonna go all the way down there, I think there are some other ones, but again, like they're so expensive. Implied volatility is 230%, above 200%. That means you're probably buying your option plays like 200% more already. So just keep in mind if you're buying puts on this one, 40 puts is out there. If you're feeling rich and you want to play closer to get more money, there are some plays here too, but they're not in my category. They're expensive. Like you see here, the 70 put will be probably the one. I think, but based on the volume, but it's not cheap. This is expensive. And if you're feeling bullish, like I said, you want to kind of spread it out, right? You say you buy your 40 put for this week and you're feeling bullish, right? And you think, you know what? It might surprise everybody and it might go up. Because I think Zoom is debt free. You could be looking at some of these ones here and they're not cheap as well, right? Maybe you want to buy something ridiculous. I don't know if he's going to go all the way to 140, but like I said, the implied volatility has gone up. It's gone really high. So I don't think this is not going to give you much. But if you really want to protect yourself, let's look at the next week calls. Or you could just play a spread on the calls and do a spread. It's not going to get there, but you could do a spread on this one. Find something that's probably less than $100. You buy the closer one to the price, and you sell the one that is far off. I think you can get Like this one, if you do the 2 year, buy 100, sell 105. If you're thinking it's going to get to 105 by June, this is about $100. So you can put it yourself, but you're looking at, in that scenario, you're looking at a 40 put, which is $17, and a $100 spread. They're not really matching. And one thing about spread, I just want to give you, I don't have the best screen to share here. One thing is, another thing you have to think about when you're placing your option is always look at the difference in price. So in this scenario, 80 to 40 is about 50%. Look, about 40%, right? You know, it's 89, so it's about 40% each. 40%, that's a $40. If your option is more than $40, or if your option is more, this is it's not the best way to describe it, but you have to think about option as times 10 times 100, right? So if your option is more than a drop that you're gonna get in a price in an option, sorry, let me rephrase. If the cost of your option is more than the drop in price of that particular stock, then you have to always have a very good reason why you're going for it. Like this one is $17. If you multiply this by 100, it's about anyway. Let me rethink that definition, and I'll share with you guys. I think what I was getting to, it works on spreads. It doesn't work on this one, but I'll kind of like explain in the watch list room on the floor. Hopefully, I'll be able to explain why some spreads might not be, might be useless. Some spreads might be the way to go. Like the Costco I was telling you about. Costco is a good example. There's something called calendar spread. You could actually do calendar spread on Costco. So let me show you something here. Don't want to waste our time, but let me show you Option Strategy. It's a website that I normally use to quickly look at some of these spreads. If you play calendar, if you're bullish on Costco and you have a calendar spread on Costco, right? And you do May 27, you say Costco is going to be 435. You have to move this guy. So, and you sell you sell this one, which is 435. You can see the price is not great, but 492 compared to when you do 435 on Costco. Hang on. Yeah, compared to 900. So that's why sometimes spreads are better, because if this doesn't go your way, then you waste a lot of money. Obviously, I don't know who's going to pay for this, but some people are buying it, obviously. If it doesn't go your way, you lose a lot of money. If it goes your way, you make more money. But the spreads, this is saying Costco will be actually, this is the best. The next week, yeah. So this is a good example. So if you're playing a calendar spread and you think Costco will get up to 435, you could sell 435 for this month and buy 435 for this week, and buy 435 for next week. The cost is 167. Your maximum profit is 1,257. How does this work? Costco has to finish. You see all this bright green? These are all profits. Costco has to finish somewhere around there. You lose money when Costco goes below 395 by 4 p.m. on Friday. You lose money only when it goes below 395. You make more money. Let's see. So yeah, this is the range of a calendar spread. You will make you start to lose money when Costco goes about $482. You lose money when it goes less than 395. So in between this range, you make money. I think your maximum is right in the middle here. This one here, 438 or 435 on the dot. Even between 424 and 460, you'll be 100% or more. So that's why that's why you see the volume on some of these ones. Some of these contracts are higher because they're playing spreads on them. Anyway, let's not go too deep into that. But that's the way to play some of these really expensive options. So every time you see an option is expensive, the first thing people do is, oh, it's too expensive, I'm gonna run away. That's because you don't know the strategy. There's a lot of strategies we use here. And like I just showed you here, right? If you play the 435 calendar spread on Costco, you have all this range from 448 all the way down to, as a matter of fact, 394 to make money. And you can see all the grains right here. They won't give you 50,000% or whatever it is, but you're paying 167 to make money. You're building your portfolio. If it ends up at one at 435 on Friday, you will be up by 100% or 1,000%, as a matter of fact. So that's how you play some of these values. Don't run away from the price. Just use a different strategy. You don't want to go straight. You want to play spread and so on. Anyways, I've covered a lot. And like I said, I really wanted to do 15 minutes. I don't know why I went on to like an hour, but keep an eye on this one. Yeah, balance sheet is on 1st of June. That's when the Feds will start selling the balance sheet. So keep in mind, this might be tricky time for the market. Another one I wanted to mention was SIGA. Let me even go to this one. This will be the last one. SIGA has been moving because of the monkeypox. Monkeypox going on. Look at that big volume that came in on Friday, Thursday and Friday. It's been booming because of monkeypox. I think they are into monkeypox. They have the jab for monkeypox, like human smallpox diseases and anything pox. They basically have all they're FDA approved as well. So that's why they've been booming. And if you look at the monthly chart on this SIGA, you can see it's going back to 14.7, which actually already broke in pre-market. Now this is 15.49. So you can see the volume. It came in at $7 and 100% already. So I'll wait for this one. RSI is high like Snoop Dogg right now. You want to wait for it to come down a little bit. Bring it down a little bit. Don't jump into it. But I think this is one you definitely want to hold in your account, SIGA, just in case. Smart monkeypox is gonna keep going up for some reason. They're gonna keep talking about this. United is right, just for them to spread the fear and everything else. They'll keep talking about monkeypox, make everybody scared. But the idea is, this is a really good one. Wait for it to come back down a little bit. RSI to come down. I looked at it 1 minute. RSI wasn't too bad, but again, you're playing with fire right now because RSI on the daily is 91. Even on 15 minutes, it's 77. That's too high. You want at least the 15 minutes to come down to like 50 or 60 mark RSI before you get in. And the options, they added more recently. The max you could get before was the 17. And I think on Robinhood, they added up to 25 now. You can see on Friday, I didn't see it. I saw this really late. On Friday, they had about 1,400%. Anyways, those are the things I wanted to share with everybody yet. I know we're way past time. I'm way past time. I need to go take care of my little kid, but I think we have room for 1 or 2 questions. So if you have questions, just let me know. We could jump into it right now. If not, we'll call it a very happy Sunday. Anyone has any question?
You mind charting Boeing real quick?
Boeing. All right. Boeing, just for disclosure, right? I don't like this company. I just have to put it out there, but Boeing is, hang on, let me get rid of some of these stuffs here. Boeing is actually, from a chart point of view, good God, look at this. I'll be waiting for one. I think he actually did. Did he not get to 112? He hasn't. Okay. So from a daily chart point of view, and this is just my 2 cents, I'll be waiting for this support here. Right here. You see how he bounced right here? He came all the way down and bounced right here. And it was kind of like a bit of a resistance around there. It bounced exactly on 5/14/2020. And he hasn't touched that since then until now, which is really close. So I'll wait for this 113 level to get into Boeing. That's just my 2 cents to get into Boeing. Let me look at the weekly. I know there was some news right there. Yeah, you can see the weekly chart. I'll wait for this level. This is not bad level 2, the 120. So maybe you could play up to 120, but it's too close. If you look at the options for 120, you probably won't get much room to maneuver. If you do 120 call on Boeing, it's expensive. So yeah, I won't touch the 120, but 120 is a good level 2. If he holds the 120, it may go up to 123, 130, right? But I'll rather wait for this bounce on this line. This line was the line he bounced at, going all the way back to May 15, 2020 on the weekly chart. So if he touches that line and it bounces, and then you can see the RSI is coming down to, if it bounces there, that will be time to maybe jump on the 120C. And you probably want to go long on that one, depending on the price at that point, right? If you want to buy a call on a red day, so if it keeps coming down, if it comes down to 120, I think the 120, just buy 1 week in advance for your expiry. I think 120 is still very high. So you want it cheaper, but if it doesn't come down, I think 130 might be the next level. It might retest this 132. Let me go to the daily chart. It might retest this 130 mark here, 132 mark for a double top for you. So to determine, but yeah, I'll wait for 113, 112. Otherwise, you could play the 130 and put your stop loss. If he holds this level, let me look at the 1 hour chart. Yeah, if he holds this level, this 120, above 120, I think it might come up to 123, like I said, then 127, then Grand Slam of 130. So keep that in the back of your mind. The only thing is this level, yeah, he has to break above 123. So to show that the buyers are really interested, he has to take out this 123. Otherwise, I think it's probably going to come down to this 113. All right. Any other questions? All right. Thanks, everyone. I know David couldn't make it today. I had to jump